Merchant banking. Introduction. So the entire range of financial services, from extending finance for investment in projects to organizing finance and further assistance in financial management, acceptance of housing business, raising issues of foreign currency bonds. What are foreign currency bonds? Now, these are bonds issued in foreign currency, and it is also a convertible, which is a mix of debt to equity instrument. So that's a foreign currency bond, which is issued in a foreign currency in any country, and it is also a convertible bond from debt to equity. So for the issues of foreign currency bonds, merchant banking, merchant banking is involved actually. Also in raising euro dollar bonds. What is euro dollar bonds? Euro dollars are basically, it's a US dollar deposited outside of US. And euro dollar loan is a loan that bears interest rate based on LIBOR or London Interbank offered rate. So that is a euro dollar loan. But euro dollar bond or euro dollars are basically US dollars deposited outside of US. So merchant bankers help raise euro dollar bonds, helps also in raising issues of foreign currency bonds. So that's what they do. Now, however, after SEBI abolished all category of merchant bankers other than category 1, now they are mandated to manage public issues as lead managers. That's their only function. There are a lot of other functions. We'll see that towards the later part of the section. Now, to recollect, public issues, what are they? Public issues are issues of convertible securities or shares in the primary market by promoters of the company to attract new investors where they pay the share application money. So that is public issues. The reason why we told public issues was that SEBI abolished all categories of merchant banking other than category 1. And they are mandated to manage public issues as lead managers. Now let us see how complex is issue management activity. Issue management activity has a huge stake in the market's integrity because it affects investors' interest, and as such, transparency should be ensured. So on a separate note, compliance is also enforced and monitored throughout this process. So to know more about the first move to start merchant banking services, there was the placement of Banking Commission in 1972. So we have to know the first move when merchant banking service was under picture or basically started, which was based on Banking Commission in 1972. So the Banking Commission report in the year 1972 favored the setting up of a new institution for merchant banking that is different from term lending institutions and commercial banks. Now, how complex is issue management activity? Merchant banking actually solved most of the complexity behind issue management activity. And merchant banking started as a result of Banking Commission report in the year 1972, where it favored setting up of a new institution for merchant banking that is different from term lending institutions and commercial banks, where they offer investment management and advisory services for small and medium customers who themselves were business people. And the Commission then also suggested that merchant banking institutions should also manage pension funds, trusts, and provident funds in India by ensuring transparency and upholding investor interest. So what is merchant banking in India? So it all started with Grindlays Bank in the year 1967, who was authorized to carry on merchant banking services in India and obtained a license from the Reserve Bank of India in the same year. Grindlays Bank recognized the need for an emerging entrepreneurial class for financial services that were diverse and distinct from system design and market research to production planning. So they started with the management of capital assets and went on addressing the need of small-scale units by providing services and management consultancy to large and medium-sized companies. So that is what Grindlays Bank did in the year 1967. It was again followed by Citibank. What does Citibank do? They set up its first merchant banking division in the year 1970. This division took up the task of evaluating new projects and also the task of assisting new entrepreneurs by raising funds through equity issues and borrowing activities. Merchant bankers by then were allowed to act as primary dealers in government securities. And as there was widespread acceptance of management consultancy services in the country, it also provided management consultancy services to numerous business establishments. So following the recommendations of Banking Commission in 1972, a lot more Indian banks started offering merchant banking services, notably the Indian Bank and State Bank of India, where State Bank of India's objective was to render assistance and corporate advice to medium and small entrepreneurial class. So that was the scene in merchant banking in India when it started off in India. Now let us see what are the merchant banking regulations. So, who is a merchant banker? That is the first question. Now, a merchant banker is any person who is engaged in issue management business, either by making arrangements in buying, subscribing, or selling of securities as manager, consultant, or advisor, and also renders corporate advisory in relation to such issue management efforts. So what is merchant banking? What does the merchant banking institutions do, or what are they? Organized as body corporates, merchant banking institutions were governed by the merchant bankers rules issued by the Ministry of Finance and by merchant bankers regulations issued by SEBI. Okay, so that we spoke about merchant banker and merchant banking institutions, which actually go with the regulations, merchant banking regulations. Now, what does investor confidence dependent upon? Investor confidence depended a great deal on the efficiency of issue management functions, including drafting and issuing of letter of offer and prospectus. Prospectus, you normally do file it when the company goes public or they have public issues. And after submitting it to SEBI for the primary markets, a lot of efficient work happened for the timely dispatch of refund orders and share certificates. So that is where investor confidence is dependent upon. Now let us see what is merchant bankers regulation. So regulating the raising of funds in the primary market. The merchant bankers regulations assure the issuer of a market where they can raise resources effectively and ensures a higher degree of protection in terms of interest of the investors and merchant bankers alike. So for the merchant banker, the regulations provide a competitive and dynamic market with a higher standard of solvency, honesty, integrity, and competency. The regulations also mandate that anybody proposing to engage in merchant banking needs authorization from SEBI or Security and Exchange Bureau of India for engagements therein. So that is basically what is merchant bankers regulations. Next, we'll see what is registration and prospectus filing. So under that, is merchant banking registration limited to only category 1? So we'll get on to that question, but before that we have to know that on 5th of September 1997, SEBI abolished all the categories of merchant bankers that are below category 1. So all merchant bankers operating in category below category 1 should now work under category 1 status, which is as a lead banker. Okay. Now, what is merchant banking registration limited to only category 1? Merchant bankers under category 1 can carry forward activities relating to issue management, including the preparation of prospectus, determination of financial structure of a company, final allotment of securities, refund of subscribers, as well as tie-up of financiers. Yes, it is true that merchant banking registration is now limited under category 1. Now, what are the matters to be considered by SEBI for the grant of a certificate of registration? That's the next question. So, the matters are necessary infrastructure. Merchant bankers must have necessary infrastructure in place to carry forward the business of merchant banking. Next is body corporate. Merchant banker should be a body corporate other than a non-banking financial company. Third requirement is at least 2%. It should fulfill capital adequacy of rupees 5 crores. So merchant banker should fulfill capital adequacy of a minimum net worth of rupees 5 crores. The next requirement is at least 2 persons should be employed. So merchant banker must have employed at least 2 persons with experience to carry forward the merchant banking business. Now the other requirement is the matters to be considered by SEBI for the grant of certificate of registration. So the other requirement is merchant banker should not be in litigation with securities market. Merchant banker should recognize professional qualifications in finance, law, and business administration. And the registration should be in the interest of investors and the investor community. So those are the matters which are considered by SEBI before granting certificate of registration. As per the advice of registrar of companies, only merchant bankers can file a prospectus for public issue and should be authorized by SEBI under a given code number. Also, the registrar of companies is required that he or she will not register a prospectus if it is known that it has contents in the prospectus that breach the provisions of a law or statutory rule or regulation. So these many things the SEBI considers before granting certificate of registration. Next is we'll see what are the functions of merchant bankers. What are the functions of merchant bankers? So the functions are capital restructuring, issue management and underwriting, portfolio management, working capital finance, mergers, amalgamations and takeover, venture capital and lease financing. We'll go through briefly what each of them means. So capital restructuring. The aim is to reduce the cost of capital in capital restructuring and work towards maximization of shareholder wealth. So the following services are provided by merchant banks in this regard, namely optimum capital structure as is determined, as well as getting consent from the controller of capital to issue bonus shares by the capitalization of reserves. So please watch a dedicated lesson on financial management capital structure to understand the concepts behind it. So we already have a lesson where we define what is capital structure in financial management. You have to go through that to understand more about capital restructuring also. Okay. Next is issue management and underwriting. Issue management and underwriting involves management activities around public issues of corporate securities, namely equity shares, preference shares, bonds and debentures to procure money from the capital market. SEBI guidelines is actually followed in regard to issue management and underwriting. So these are things which are done by issue management and underwriting are done by merchant bankers. Next is portfolio management. Portfolio management involves investment decisions in marketable securities with minimum risks. Merchant bankers provide advice on select investments, collects and remits dividends and interests, undertake any investments in securities, and provide safe custody of securities in India and overseas. So that is what is portfolio management. Next is working capital finance. So merchant bankers do working capital finance, which is the fund required for the day-to-day expense of the enterprise. They assess working capital requirements and facilitate the sanctions of credit facilities for speedy disbursements. So that is working capital finance. Working capital finance also, there is a section dedicated to that. You have to watch that video to understand what is working capital and what is working capital finance. It comes under financial management. Next is mergers, amalgamations, and takeover. Briefly, this mergers, amalgamations, and takeover. Merchant bankers arrange for negotiations of acquisitions and mergers by offering expert valuation services. So they do valuation actually. They also conduct a SWOT analysis, strength, weakness, opportunities, and threats analysis, and studies for locating overseas markets, foreign collaborations, and joint ventures. This is done after getting approvals from shareholders and stakeholders and monitoring the implementation of amalgamations and any mergers actually. So that is mergers, amalgamations, and takeover. And what does merchant bankers do as a function for venture capital and lease financing? Venture capital basically is seed capital in the form of equity financing for high risk and high reward projects. Lease financing, on the other hand, is a fund-based financial service where leasing let the lessee use assets for a particular period of time. And on that basis, what all services which these merchant bankers provide. They provide advice on feasibility of leasing, as well as they provide advice on a rental structure. So these are the things which are done by merchant bankers. Remember, there are more functions which are done by merchant bankers, but these are some of the functions which are important, which is done by merchant bankers, which we are listing it down. And lastly, it is code of conduct. So code of conduct stipulates that merchant bankers act in an ethical manner, exercising due diligence, where they do not involve in unfair practices or they do not do any misrepresentations. Merchant bankers should also abide by all laws, rules, and regulations passed by the Government of India and SEBI, which is Securities and Exchange Board of India, at all times. So that is a gist of what is a code of conduct for merchant bankers. So this section, now we wrap it up, which is actually merchant banking. Thank you.